Hey, what's up, everybody? It's your boy Jaluski, aka Lusky Lou, aka Lusky with the Lou, and I want to welcome you back to my channel. I want to thank you for tuning in for today's video, which is part 2 of the What is Day Trading and Is It For You video series. Now, on today's video, we'll be going over characteristics of a day trader.
Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you. Come along and see.
So, this video focuses on professional day traders or people who day trade for a living, and not those who do it as a hobby or to achieve a gambling high. Professional day traders are typically well established in the field and have an in-depth knowledge of the marketplace. The following are a few prerequisites to day trading. Prerequisite number 1, knowledge and experience in the market. 9 out of 10 traders lose money, and that's just how it goes. And that's because individuals who attempt to day trade without having a significant understanding of the market fundamentals often end up losing money. Prerequisite number 2, sufficient capital. One cannot come into the market expecting to make money. Day trading use only risk capital, which basically means investment funds allocated to speculative activity. In other words, they can afford to lose the money which they are using to trade, okay? So this protects them not only from financial ruins, but also helps them eliminate emotions from their trading. And that's a really big issue with day traders nowadays, is the fact that it's hard to control our emotions because our emotions are tied to our funds and our capital. A large amount of capital is often necessary to capitalize effectively on intraday price movements. However, it isn't necessary in order to get started or become profitable. Depending on what brokerage firm that you use, you will require to deposit $25,000 in order to day trade or have unlimited day trades, or to bypass the PDT rule, which is the public day trading rule. There are other brokers which there is no minimum deposit that you can use, and you can still start day trading. However, you are limited to 3 trades per week because of the PDT, which is the public day trading rule. So, after you've educated yourself and gained the necessary capital needed to trade, your third prerequisite would be a strategy. I cannot stress this enough. A trader needs an edge over the rest of the market. So therefore, he or she develops their own strategy according to their goals. Different traders have different goals, so each goal requires a different strategy. Some people have long-term goals, and some people have short-term goals. There are several strategies that day traders utilize, and some of these strategies include swing trading, trading the news, scalping, or even arbitrage. And I'll be going over some of these strategies so you can have a brief understanding of how some of them work. Okay, so for the first strategy I mentioned, which is swing trading, it's an attempt to capture gains in the stock or any financial instrument within an overnight hold or even up to several weeks or several months. This is not to be confused with a day trade. If you do have the time to sit at a desk and watch the price movements of a stock after you buy in, then this strategy will make sense for you. Swing trading has a high risk and high reward. And the risk is high because stocks can do anything overnight into the next day, including go to complete opposite way of your designated target price. Another strategy I mentioned, which is trading news, is pretty much very simple. Every now and then, more than often, corporations have news announcements, press releases, new products hitting the market, earnings, mergers, rumors, and I can keep going on because the list keeps going on. These are all news events that can cause a company's share to move wildly up or down. Traders take advantage of these momentum movements. When trading news, there is a medium risk with a medium reward. Scalping is basically a trading style specializing in taking small profits on small price changes, generally soon after a trade has been entered and become profitable. The logic behind this strategy is that every little profit adds up. Now, you will need a strict exit strategy because one big loss can wipe out all small gains. And as a scalper, your intention is to take as many small profits as possible. And there is a low risk, low reward for the strategy. But like I said, you need a strict exit strategy because one big loss can wipe out all your gains. Arbitrage. I'll give you a quick definition. Arbitrage, it's basically defined as a trade that profits by exploiting the price difference of identical or similar financial instruments on different markets, exchanges, or in different forms. It exists because of the market inefficiencies, and if all markets were perfectly efficient, it would cease to exist. In a nutshell, a security is purchased in one market and simultaneously sold in another market at a higher price. Now, I'll give you a quick example of this. Consider the following. The stock company X, we're going to use company X, is trading at $20 per share on the New York Stock Exchange, which is NYSE for people who don't know. That's the abbreviation. While at the same time, it is trading for $20.05 per share over at the London Stock Exchange, which is LSE as the abbreviation. A trader can buy the stock on the New York Stock Exchange and immediately sell the same shares on the London Stock Exchange, earning a profit of 5 cents per share. Now, you see where I'm going with this? Yes, it's a cruel world on Wall Street, but that's how it works. All right, so those was a couple examples of strategies that some traders use. It doesn't go into depth about entries, exits, but those are fundamental strategies when you're just starting out. Last but not least, and to me, the most important characteristic of a day trader, which should have been first on the list, but I saved it for last because it's the last thing I want to leave you guys with, is discipline. Without discipline, I don't care how profitable or how good your strategy works, it will eventually become useless and you will not last long in this game. Many traders, and when I say many, 9 out of 10, end up losing money because they fail to make trades that meet their own criteria. Like I said, without discipline, you will eventually lose. Part of discipline is following your strategy and sticking to your plan. As they say, plan the trade and trade the plan. Stick to your strategy and do not force trades. I tell some of my current students right now, in this game, it is better to not make money than to lose money. And with that being said, success is impossible without discipline. I'm gonna leave you guys on that one right there. All right, everybody, that's it for part 2 of What is Day Trading and Is It For You video series. In part 3, we'll be going over day trading for a living, which basically goes in depth from when you wake up in the morning to when the market closes. I hope you enjoyed the video, and I hope you are better educated than you was before. And if you are, don't forget to like and subscribe, and also share the knowledge. Jaluski, checking out.
Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you.